thank everybody for joining us on this webinar. This is the first Eden Lawnmower webinar that we've hosted. We are looking to do more in the near future. This one's going to be topics that are going to be on financials. It's always been a unique area for myself, and I think every small business needs to be a little bit more educated on it. So that's why I went to a professional to help guide me. And so we're proud to introduce today Austin Williams. So I'm going to give you a little bit of introduction for him. Joining us is Austin Williams. He's a CPA and MBA and the founder of W Consulting LLC, based out of Chapel Hill, North Carolina. Austin's journey began at Howard University, where he earned his undergraduate degree with a concentration in accounting. He further honed his expertise at Wake Forest University, obtaining an MBA with a focus on leadership. Driven by a mission to empower others, Austin launched W Consulting LLC to help small and mid-market business owners strengthen their financial frameworks. In short, he's a dream maker who turns complex numbers into clear paths for success. When he isn't transforming businesses, Austin is a devoted family man, happily married with two beautiful children, and we're thrilled to have him with us. Welcome, Austin.
Thanks, Joey. So just a little bit more about myself. I'm not going to sit here and lie to you guys. I made a business based off of honesty and just transparency, which is kind of what the accounting industry was meant to be. I'm not going to claim to be a financial planner. However, I do have a specialty with helping small businesses grow, as well as just kind of making businesses that are on the path to success ensure that they stay on that path, whether it be your first time startups all the way up to your more established C Corp type companies making multi-million dollars in terms of their bottom line a year. So just to kind of hop right into it, I'm gonna keep everything really conversational, really brief and high level. I know I don't have that big of attention span, so I wouldn't expect just throwing numbers at you guys or throwing a lot of information would be useful. So just kind of hopping right into the material that I planned. Whenever you're starting that business, it's all about getting the paperwork done first. This part that we all don't like. I know that we all have an idea. We all have kind of what that dream is. And the first step, honestly, is setting that LLC up. And it's as simple as kind of logging on to the North Carolina Secretary of the State website. Just going to register your business, whether it's going to be an LLC, an S Corp, a C Corp, a partnership, a sole proprietorship. Those are just some of the areas that you can kind of choose from. And I think that when you're setting up that business, the first or the most important thing is knowing what do all those different terminologies mean. And just really high level, getting your business filed only costs $200, just that initial fee, and that's if you want to expedite it. If you don't want it done in 24 hours, it's $53 just to put your name in, put your information into the website, and then once everything is in there, Secretary of State recognizes you as that corporation, and you can go on the IRS website and get your EIN number. So that way you have all your tax documents, so that when you are doing your work and doing the things that are going to bring in that money, you got your W-9 and you're not having to do everything via 1099, and it just makes your tax process 10 times easier. But with understanding what you're filing, I think that that's the first step. Everybody automatically assumes, oh, I need an LLC. There's a couple of differences, or there's a couple of nuances between having an LLC versus having, like, say, an S Corp or a C Corp. I'd say the big difference, just to not get overly technical, would be an LLC hits your individual tax return. So whatever that LLC made or lost throughout the year becomes taxable income at the percentage of the company that you own. So for example, with Eden Lawnmower, let's say Joey owns 50% of the company. Well, if Eden Lawnmower makes $1 million in profit once they back out all of those expenses, Joey's on the hook for $500,000 in taxable income on his personal 1040 tax return.
And also, real quick before you go on to that, explain to the audience why is it important? What makes it different than just doing a sole proprietor and setting up, some type of corporation?
So with the sole proprietorship, basically it puts all of your legal assets at risk. So if you've got a sole proprietorship and you get sued and you're on the hook for, I don't know, $500,000 and you don't have insurance, they legally have a right to come after your home, your cars, your personal savings, everything that you own in a sole proprietorship is attached to that business. Whereas an LLC being a limited liability company, if you lose the business, you're not going to lose your home, or you're not going to lose those assets that you have developed or your spouse has created outside of that business.
Okay. So if I'm hearing it right, then basically there's a separation. You could operate as a sole proprietor, just like using your social security number.
Yep.
But the biggest difference is the separation between you as a person and you as a business.
Exactly.
And you get, there's some separation that would help on a legal standpoint, as well as taxes as well.
Yep.
Is that correct? Okay.
So the sole proprietorship and the LLC in terms of taxes are pretty simple.
Will be the same.
Pretty much the same, but the sole proprietorship versus an LLC just keeps your family secure.
Okay, good.
And that's the biggest thing that I would say that I would recommend if anybody's doing a sole proprietorship, just go ahead and throw it into an LLC. And then it just kind of keeps your nose clean. So just in my industry, you're always thinking about the worst. We call it professional skepticism. So you're always worried about what is the risk of doing X, Y, and Z, and how does that risk affect not just myself, but the reason you're in business to start with.
It's kind of like you're trying to mitigate as much risk as possible. Same way you get business insurance.
Bingo.
You need some coverage. So what about delegation and preparing for success? What's some help me set myself up for success?
So really with delegation, preparing yourself for success is I look at everybody's industry. Everybody went to school. Everybody was born with a gift. And when you're running a business, it's a combination. It's basically like building a house. And there's a bunch of different items that come into play. So you've got your HR function. You've got the different functions of a business. And as an owner of a business, you can't run everything. You can't be in charge of your email. You can't have your own schedule. But then turning around and spending, I don't know, 20 to 30 hours on the accounting side of things, it takes away that time from you doing what it is that you went to business for to start with. And really, I think that preparing for your success starts not at the middle when you're starting to get overwhelmed with all the volume and all the success that you're having. It starts before you even open your doors. Because if you've got an idea and you are willing to go all in on it, it means that you really think that this idea that or this venture that you're getting ready to start it's going to work. And just like kind of talking things into existence, you've got to go in knowing, all right, this is going to work. So rather than me playing catch up or trying to build the foundation that would essentially kind of insulate you and make it to where everything runs like clockwork or like these big corporations, so to speak, going in and setting it up on day one, even though you might not need all of this infrastructure on day one, is going to pay dividends when you look up 6 months from now and your client book is this, you've got this much revenue coming in. I can give an example for myself. I started this W Consultant probably about 18 months ago. I didn't get my first client until 9 months ago. But I had my office set up, computer ready to go, I had all the software invested, already set up, so that when I started getting an influx of clients, it wasn't a matter of, okay, let me go find this, let me go find a software that can help sustain the level of business that I want to create. I was able to kind of start delivering on what it was that I was selling on day one. And it was one where I've got a plan to be able to delegate work to a group of people that I've already started the training process before I even got to the point of reaching capacity. So now I'm probably about 25 clients, and I'm looking at taking some of the workload off of my plate and shifting it over to other people. But if I were starting that process now, ultimately I would be behind the eight ball and start getting behind, because ultimately what you're selling when you're selling a service or you're selling a good is you're selling your name. And it's all about maintaining that level of quality from day one all the way up until the day you decide you're ready to close your doors. And the only way you can do that is making sure that you've got capacity.
Yeah. So that's when you say selling yourself or selling your service, you're good. That's your brand, right? So I think from my takeaway there was be proactive instead of reactive.
Bingo.
All right.
Always plan to succeed. Plan
That's
to
right.
have that capacity.
So let's move on to tax planning. Why is tax planning important for a business?
So just like with anything that makes money, the IRS wants their cut. And ultimately, there are ways, I don't want to use the word ways around having to pay huge in taxes, but the way the country was set up, it was set up for small businesses and your middle market businesses to be able to create their fortune and create that wealth without having to pay a lot in taxes. Reason being is small business is what runs the country, and that's the reason that the American dream is what it is. But if you make $500,000 and you're taxed at 34% of that, it's going to be hard to sustain the owner's lifestyle, as well as paying employees, and then also looking at making sure that you can grow and expand. And I think that when you start your tax planning, even if you file in October, getting your taxes set up in February, March, and knowing, okay, what could I owe for last year? And what can I owe going into this year, just based off of what I'm projecting to spend and make? You can then make decisions that will allow you to invest in your company that will also lower that tax burden. So, for example, if you've got a tax bill of $70,000 owed to the IRS, and you're trying to figure out, wow, what am I going to do? How am I going to pay this $70,000 bill, make payroll, as well as upgrade my materials, upgrade my supplies, upgrade everything within the organization to make it keep growing and keep delivering on that brand. If you would have known that you were going to owe $70,000 in March before you even get to October, well, then you could have maybe taken that $70,000 and invested it into some more machinery or more equipment, which would then have lowered that taxable income, would allow for that expansion or allowed for that growth to then happen, but then it gets deducted off of your taxes. But you're not going to know that until you actually see the form itself and see what you potentially could owe. So kind of just like the delegation and preparing for your success, it's all about being proactive and making sure that you know, okay, what direction am I going? What am I going to need this capital for potentially? And then let's say you have excess capital. The different tricks that most business owners have been using for years that your smaller business startups don't necessarily know about or don't even realize it as an option. Retirement plans, life insurance, all of these different avenues to create your own bank ends up being these opportunities to you're creating your own bank, but while you're creating that bank, you're also deducting money off of your Schedule C and your taxable income. So then you're on the hook for a lot less while having your money sitting somewhere that is still accessible to you. And it's tax-free. And it's all about kind of figuring out, well, what are the different legal avenues that I can go about doing things to keep your business safe, while also making sure that you've got capital to be able to expand and grow without having to go rely on a bank, or without having to go and rely on some other institution, because you basically put a large chunk of money into the black hole, I like to call it. The more you can
Well,
keep.
yeah. So speaking of capital, that's kind of our next topic. We were talking about growth and expansion a little bit there. What would be a relatively easier way for a small business that's trying to grow, that needs some capital? What would be some paths for those individuals?
So there's a few paths that these small businesses can take. So you've got your bank loans, your SBA, and then I know what's really hot right now in the market is private equity. I would say anybody looking to grow small business, middle-sized business, even if you're selling your business, private equity is probably one of the last options that I would want to take. Reason being is private equity comes in and essentially they ruin that business's brand, because 9 times out of 10, you've got people looking at a spreadsheet. They see what the profit margins are, and they basically come in, they put their money up, and they expect a return on that money. They're not worried about the industry. They're not worried about the clients. They're not worried about what it is that you built over all of these years. Example I've got is I've got a home healthcare business that was purchased by private equity for about $110 million. And they are currently in the process of, I'd like to call it being destroyed by this private equity firm, who is basically ruining the market and just hurting their customers, because the services that they're providing are needed, and it's very, very lucrative if done properly. But when you're only worried about that bottom line, it becomes one where stuff starts to fall by the wayside, and things that you may have built your name on is no longer there.
Yeah.
Is with the debt sourcing piece of it. It's all about, I'd say, who you know, just like anything else. I've been able to build an arm of my own company that helps small businesses grow and go get capital in a sustainable way, to allow them to get the capital that they need to expand, while also not putting them at risk of going bankrupt because they can't pay back the loan just because the bank approved them for XYZ.
That's a good point. So tell us a little bit about what, we've been talking about financial struggles. It seems like it's a hot topic for most small businesses. So talk to us about, what's the difference between an accountant and like bookkeeping? What's the major difference in the structure there? So
really with bookkeeping, you can go online and get a free 22-hour course in QuickBooks from Intuit Academy, and basically learn the ins and outs of bookkeeping, right? So I know a lot of people that have their own bookkeeping company. They charge like $150 or $300 a month to do just bookkeeping. And while the price itself seems mouthwatering, it's like, oh great, I can have somebody come in who's a professional that can do my books, and they'll know exactly what they're doing, and they'll know the ins and outs. 9 times out of 10, that bookkeeper is going to mess you up. I've had a couple companies call me telling me that they lost $1 million because of their bookkeeper who messed up journal entries. And it's one where it kind of goes back to delegation and prepping for your success. You want to have professionals in there that know what they're doing, along with knowing what they're doing, being able to deliver on what they're selling. Whereas if you go get an accountant, or if you get somebody that has, I don't put too much stock in the 4-year degree saying you've got to have this, or if this person has an associate's degree, they don't know what you're doing. I put more stock in, what do they know? what is it that they're selling? Are they telling you that they can do the journal entry through the debits and credits? Or are they telling you that, hey, I can help this business grow and I can do it at this price? I like to tell my clients all the time, I'm not necessarily a bookkeeper. I'm not necessarily an outsourced CFO. I look at myself as more just like a partner for each business that I work with, where it comes to learning you guys' industry and knowing that, hey, my expertise is in the numbers, giving sound advice and allowing that the business owners make those final decisions. But ultimately, I can make sure that books are in line and business owners are no longer worried about the financial parts of it. And with that comes the whole administrative backroom piece when it dealing with payroll, HR, and dealing with making sure your bank statements reconcile. But then you also go into that financial planning piece, whereas you got your taxes and you've got just kind of understanding the full scope of the administrative side of your business. Unfortunately, any business that operates, there's a reason for all these different special certifications, right?
Mm-hmm.
You got your CPAs, your CMAs, and you got all these different individuals who go through these tests for a reason. It's to get that experience, to be able to then turn around and offer that level of expertise that at a standard that is, you're held to a higher standard. So each year you've got to certify that if I tell somebody something, that if it's wrong or if it's illegal, I'm held to a standard that somebody that doesn't have a CPA isn't held to. So I can't just give advice and think that if it doesn't go well, there's no repercussions for that advice. And I think that's the biggest difference, is making sure that the person that you're working with not only has a little bit of skin in the game, but also has the experience and expertise and the knowledge to be able to then guide your company through the different phases of that life cycle for your organization.
Yeah. So it's kind of like the old saying goes, you get what you pay for sometimes. And you kind of touched on this, and next we're going to talk about payroll. I know that's another area that's usually, you start off as a solopreneur and now you're morphing out into a bigger company that's got to hire somebody and have people. And do we just write them a check on a piece of paper and say, hey, here you go, or is there more involved?
There's a lot more involved when it comes to dealing with the payroll. You've obviously got your payroll taxes as well as your workers' compensation. You've got quarterly taxes that have to be approved by the state. And different industries require to have different levels of insurance and workers' compensation to make sure that employees are taken care of and safe. One thing that I advise a lot of my clients to do, especially if you're just starting out, consider whether or not the person that you have working for you, are they going to be there long term? Are you planning to give them benefits? Do you want to give them health insurance? All these are costs that the employer ends up having to take on that burden. But it's the cost of doing business. Now, I don't necessarily recommend that anybody do their own payroll. I know QuickBooks has a good function, ADP, Gusto. There's all sorts of payroll providers out there that they don't charge you an arm and a leg. It's scary, but they don't. They charge you. So for myself personally, I've got 2 contractors. I don't do benefits just yet. So everything that I pay is 1099 work to my employees. And I run that through ADP because they charge me $83 a month to process my payroll. They file my 941 quarterly taxes, and they basically make sure that everything from the compliance standpoint within my industry is taken care of. And there are a lot of different compliance portions that we just don't think about when trying to give somebody a paycheck to go pay their bills for the services that they provide. And it's one where if you don't know, then you could come up at the end of the year and you could have an even higher tax bill on your employer tax side or your business taxes, because you weren't paying the FICA, you weren't paying these different small tax burden or these small taxes that it might be insignificant, but if you multiply that times 26 times, I don't know how many employees that you have, you could be looking at a nice hefty sum, as well as potential litigation, or as well as potentially somebody, the Better Business Bureau, come in and try to shut you down because you're not operating within compliance. And these are just ways, again, like with that LLC, is just trying to keep yourself safe and trying to make sure that you're doing all the small things that seem insignificant or seem, oh, that's for, these bigger companies. You doing them now when you have one or two people, so that when you do get to that 100, 300 plus size employee count, you're able to operate and go to sleep at night and not have to stress, oh crap, did we file this? Did we do this? Because once you hit a certain dollar threshold, Uncle Sam's looking at everything that you're doing, and you're held to a level of scrutiny that you're probably, if you don't have systems in place, it's going to cause you to stay up at night.
Yep. Makes sense. So again, it sounds like you're going to planning. Don't react, but be on top of everything as you're starting this business. Let's look at life insurance and family protection. What's a reason that a business owner would potentially need to have some type of policy for themselves or for the family?
So ultimately, we all, especially being young and healthy, we don't expect the worst to happen. But when you're young and healthy, this is the time to start thinking about the future, whether it be your own mortality, whether it be your legacy, and it be just kind of that exit strategy on how to kind of get out of the game. We're all not designed to work forever. And so with that, looking at the reason we all get into owning our own business, or the reason we get into just going into the workforce itself, it all goes down to taking care of your family. So I've got two small kids and a wife. Everybody's healthy. There's nothing, knock on wood, everybody stays healthy. But just planning for college, it's one where it's a scary feat. But it's going to happen. You're not going to be able to stop the clock. You're not going to be able to stop time. Your kids aren't going to be babies forever, and you're not going to be a spring chicken forever. So it's all about thinking, okay, how long am I going to be in this game? I know for myself personally, I plan on being in the details for 15 years. Once I hit year 15, I want to be able to focus solely on business development and, hitting the golf course at 5 to make sure that whatever deals need to be closed are closed there, and not behind the computer and worried about the details. But with that, you got to have different banks and different avenues. It's kind of what we were talking about earlier, to be able to sustain and to be able to kind of move that along. One example I'll give is in the CPA profession. 55% of the CPAs in Texas are over the age of 65. What that means is 55% of those CPA firms in Texas are getting ready to close their doors, and clients are getting ready to start looking for new CPAs. The reason these doors are getting closed is because those CPA firms don't have exit strategies. They don't have a way to pass down this book of business or to keep that name on the door, because there aren't anybody waiting in the wings, and they didn't have a plan to, okay, so when I get past XYZ point and I'm ready to retire, how can I stop working? And it's one of those ones where if you own a family-owned business, if you own a big corporation, having those different strategies in place is vital. I use life insurance as a way to do planning for the mortality, but also I use it to build a bank. It's all money that you can put in at a reasonable rate monthly, and you look up, and when the insurance policy matures, like for my two daughters, when they turn 18, there's going to be $100,000 sitting there waiting on them for college if they decide to go that route. If they decide to do something different, there's still $100,000 in unrestricted cash that is available to them for whatever endeavors they decide to go down, which it could be for grad school, it could be for their first home, it could be for anything. But I'm starting now and I'm only having to put in $83 a month. Reason being is they're young, everybody's healthy, and we're getting judged based on our health now rather than when I'm 55 or 60 and they're looking at it and you're considered a higher risk. That's when those premiums start going up. That's when you look up and you're paying $500 a month into something that you don't even know if you're going to be able to live to see it come to maturity. But what that also does is I've got two $100,000 inflation-proof banks sitting there for both of my kids. And then for myself, I've got $1 million policy that in 15 years, if I need to go take a loan, I don't need to go to a bank. I can go to the bank of myself and take that loan out for whatever reasons that I have, take it out tax-free, and that ends up being that capital that I don't have to source through the bank or through these other things. And setting it up early and setting it up young means that I'm not paying a lot of money out of my pocket right now. So it's not a big burden or seeing any capital that I'm making go to somewhere where I can't touch for 15 years. It's a very, very small portion that I think that in the short term, you don't really think about it because, think about it. Starbucks, if you go and buy 3 drinks, you spent $25, right? But that $25, if you were throwing it into one of those policies for 15, 20 years, you look up, oh crap, I've got $500,000 sitting over here. Let me go get $250,000 out now for this down payment on this new home. And then worry about where am I going to pull this capital from, or do I have to touch my reserves, or do I have to touch cash or anything like that? It's just all money just sitting there. That's tax-free, and it's one where it's a way to where you could buy your parents out of a business. It's a way where your kids can buy you out of a business. If you set it up early, they don't, you're building your kids' credit, but then also you're thinking long term. All right, well, how much money would I want or would I need to be able to be bought out of this business? And I pass this book of business down to my kids, but I don't want to take that tax burden. All right, I'm gonna need $5 million. I set up these policies. I put into them for X number of years. Your kid's not having to come up with the capital to pay you out. You're taking that $5 million life insurance. You're walking out the doors with your pockets fat. You didn't have to pay taxes on it because it's not going to be taxed as earned income if you take it out as a loan. And your kids don't end up having to shoulder any type of burden, but they end up getting that book of business if they choose to kind of go down that path. Or if you choose to sell it to somebody else, you still have that access to that same capital that you've been putting into for years. So it's a way to retire without having to close your doors or make some big sell and essentially lose that legacy that you've been building all these years. Because ultimately, these small businesses are just like they're just a part of the family. They're just like your kids. They're part of what you decided that you wanted to create. So how do you keep that? You want to keep that up. So
for sure. And I think it kind of led into our last topic, and that's having an exit plan. Just a quick, I'm going to use this as a quick plug, but if anybody needs to talk to an insurance specialist, Amanda Ormsby's on the call here today. So we can reach out to her. So, talk to us a little bit about, you mentioned a little bit about exit planning and some strategies there to help, reduce some of that tax burden. Any other thoughts on the exit plan for, setting up for succession planning, and when should that start? Is that something that they need to start in like 5 years before retirement, 2 years before retirement, 15?
So I would say succession planning starts the day you open your business, because you got to start because while you have an idea, it's all about, again, planning for that success, right? So you're building this business out, you built out this foundation. I'd say after year 1, because obviously there's a lot on your plate in the initial phases. But after you survive year one, between year one and year five, after you make that initial survival through the ups and downs that are going to come with owning your own business, um, you have to start thinking about what's my way out. How am I going to? Do I plan to sell this? Am I going to get? Is this going to be something that is going to be lucrative to private equity that I'm going to go ahead and make hundreds of millions of dollars on? It's one of those ones where it becomes a part of the plan, because ultimately the decisions that you make today are going to affect this business 15, 20, 30, 40 years down the line. And the connections that you make today are going to be those things that makes the business profitable, or if it just makes it to where you're going to break even at the end of everything. It kind of goes into the overall goal. Why are you in the business, and what is your long-term vision? I know some people my wife, for example, she wants to start her own tea business. So I asked her, I was like, so what do you want to do? I was like, what's your goal? She was like, I just want to see if it works. And she was like, my goal is, after 2 or 3 years, as long as I can break even, I'll be happy. She's like, I'm not trying to make a profit, but I think it would be fun, and I want to see if I can do it.
Yep.
So that's different than, say, somebody that wants to go start a business and they're like, I want to get rich, or I don't ever want to work for anybody else again. And then there's different decisions that have to be made, and there's different ways of going about your business plan in terms of when you start the business, that last paragraph in that business plan, or that last section, that business plan has to be the exit strategy. How am I going to retire? And you have 401ks, and you have, with the 401ks, you've got IRAs, you've got different, these are all things that help with the tax side of things, but they also allow you to focus on, all right, now that I've got my buckets, I like to call them, now that I've got my buckets of capital that I'm putting here to exit, let me focus on making the capital that keeps the business running, and I can focus on what it is I need to do over the next 20 years, just on the day-to-day, knowing that exit strategy is already in motion, and knowing that, when it's time to go out, you'll be able to leave and not have to look back or worry like, had I invested in this 15 years ago, this would have been good. Or had I done this 22 years ago, this would have been good. You never want to be in that boat playing catch up. You always want to be ahead of your time, in terms of just figuring out, how am I going to get out? How am I going to leave this industry or this business? And what are the terms I want to leave it on? You never want to be pushed out. You want to make sure that you're going out the way that you intended to go out, and making decisions that reflect your life's work, essentially.
Yeah. Well, that's all solid advice. We are getting close to the closing time of this webinar, so I'd like to give a few minutes to open it up for any questions. Feel free to either unmute yourself or type in the chat.
Well, I'll just say that was great advice. Hi, this is Queena, representing the Healthy Hair Restoration Center. I appreciate everything that was said. I was a little tardy, but I will say what he said about being behind the eight ball. You don't want to get stuck back there. I've been doing hair 27 years, and I'm playing catch up. It's a dangerous place. It is a place where nobody, I tell people, it is literally a no man's land. You don't want to be in that position where you're trying to figure out, okay, now I've had this business all these years, now I'm broken even, now I need a job. Like, nobody wants to do that. I have been an entrepreneur pretty much all my life. I've worked a couple of jobs, but when I say what he's saying is so key, and so many people, more people need to hear what he's saying, because it's like, now what do you do? So I'm in the now what do you do category. And you know yourself, Joey, I've seen you and Amanda and all of you guys. And you see me out. So this is me getting from behind the eight ball and doing what I got to do and hitting the ground running. So I'm open for all advice. I'm open for all help and all the things. So I really appreciate this. This means a bunch to me. You know, Eden Lawnmower had a good place in my heart, but you know, right now we're real snuggles right now. I'm feeling all cuddly inside now. So thank you for this.
Uh-huh. Glad it worked out. Thank you for the comment. So, Austin, while others might be thinking of a question, where, if somebody's interested in some of your services, how can they reach out to you or contact you?
So I mean, the easiest way is if you guys just reach out to Joey. I'm sure you guys all have his contact information. He can share my contact information. He's got both my phone numbers and as well as my email address. I think that'd probably be the most streamlined way to kind of get a hold of me. Just because I feel like if there's too many avenues, things start to get jumbled up.
Yeah. Do you have any social platforms currently or work?
So I've got a website where you can type in the information box. I typically don't keep a lot of information on the website. Really being is everybody's situation is different. Everybody's capital is different. And my pricing is basically based off of the business, because ultimately I'm not in the business of getting rich off of one score or one business and turning around and bankrupting the company. It's one where I realized probably about 3 or 4 months ago that the services that I provide could actually help a lot of people, because people just don't know where to find CPAs anymore, or they don't know where to call. So it's one where any call that I take, really I just get a feel for what is the business, and then what is that business's budget, and what services do they need, and what services can I provide that would kind of add that value. Because I like to say that I'm in the value adding business. I don't want to be a financial burden, so to speak.
He's custom, honey. He's custom.
Yeah, that's right.
There we go.
Mhm.
So everybody's got their own niches.
Yeah, that's right. Well, Austin, we're out of time. I do appreciate what you've helped Eden Lawnmower with, and we hope that you can help other community members in our area as well as your area in Chapel Hill. And we do thank you for your time, and everybody that joined us today, we thank you for your time as well. So
Thank you,
have a
guys.
good evening.
Bye.
Bye-bye.